you an investor doing things on your own? How about someone working with a firm that isn't so responsive or in sync with your investment philosophy? My podcast talks you through all things financial. Look, there's stuff you don't deal with very often, but investments, insurance, and retirement is something we plan for each and every day. This is the Pennywise Financial Podcast, and welcome to the show. All right, welcome to the Pennywise Financial Podcast. Constantine here at Monarch Wealth Management, and I'm joined by, of course, the one and the only Dave Georgiev, managing partner here at the firm, but we do have a special guest, and I'm going to give a little intro today, a special intro, because this guy is something else. We have the one and only Young Gun himself, David Young, the tax colonel. Welcome to the show, David.
Oh, it's great to be here.
Is the tax colonel new?
I love it. It's a new one. I like that.
Yeah, you guys gotta check out the picture that we have, the animation for Mr. Dave Young, and we'll talk a little bit about his military experience here, probably towards the end of the segment. Welcome to the show, Dave.
Oh, it's great to be here, guys.
What's going on? Anything new and interesting?
Well, this year there's a lot of stuff. Of course, every year there's a lot of tax law changes and a lot of moving pieces and parts, and of course, if federal makes a change, New York doesn't necessarily follow the change. So,
well, why would they?
Right. Why make it? Why make it too easy? So, I would definitely recommend paying attention to today. There's a lot of stuff that could get covered that would be helpful to you.
Absolutely.
I got one thing I want to jump into, and it's kind of high level. It might be a little primitive, but I'm going to start off with a clip, kind of a fun clip, okay? And I want you. We're gonna listen to this clip. It's about 30 seconds. But it should be a fun one. I think that maybe some of us have seen before.
All right.
But if you haven't, this is new to you. Enjoy. Here we go.
Is that a new lamp?
Yeah. I'm thinking of bringing homeware into the store, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah. It's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
So if I need booze to get through my day, I can just write that off?
That's a stretch.
But the skincare products you got this morning, those are a write-off.
What skincare products? You purchased skincare products?
Okay. I am the face of the company. If I have acne, what does that say about the legitimacy of the store?
That's not a write-off. That's not a write-off. This? Not a write-off.
Oh, well, the betting's non-refundable, so...
David, a write-off is a business expense used to reduce your taxable income.
Okay, well then, why isn't it called a tax write-off?
It is! It is!
Nice.
So I don't know if you've seen that one before.
like
The
that.
show
I've
is
never.
Schitt's Creek,
Nice.
if you know that. But, I mean, I got to imagine there's a lot of business owners listening to this that are current clients and maybe some prospects that have questions about, like, what actually is something that you can, quote-unquote, write off.
Oh yeah. So you want to write it off. It has to be ordinary and necessary. That's the standard. Keep
Ordinary and necessary?
Ordinary and necessary. So yeah, that's what the standard the IRS is going to be looking for. So you want to make sure if you do write it off, it is a legitimate business expense. So not.
Do you get a lot of people, Dave, just curious, like where they come to you as clients or maybe previous clients and they want to write off like a pretty aggressive, like, I want to write this off and that off, and you're like, you can't? Do you have to deal with that a lot?
A lot, yeah. Where you see a lot of people, maybe they went on and did it themselves with the software you can, download, and all of a sudden they might get a little knock at the door because they were a little over aggressive, and now the IRS is looking around. And once they start looking in one area, well, while they're there, they might as well look in a bunch of other areas. And while they're looking,
Why not?
Year number one, they might go back a couple more years. So you might have saved yourself a couple of bucks by downloading the software, but you might have caused yourself a whole lot of headache. So I would be careful before you write off too many things that you don't know what you're doing.
I believe
And and the other end of the equation is, if you leave things off the table, the IRS isn't going to come back and say, hey, if you did this or did that, you could have saved yourself a couple of bucks.
No, they're not.
It won't happen that way. I can tell you that.
Yeah. They're not trying to help you save
No.
money. Yeah.
Those are dangerous words. If you ever hear, I'm from the government and I'm here to help, that could be bad.
Yeah.
Ooh.
Who was that, Reagan?
That is Reagan.
Yeah, going old school. I like it, D.
Well-
Yeah, go ahead, Cons.
Well, we're on this topic. I want to bring up another talking point that we see a lot. Dave and I chat about this a lot through social media, right? You've got TikTok influencers and Twitter and all these other venues, if you will, that have advice where people want to save you money on taxes. One of them, you might think that TikTok has something going on with Mercedes-Benz, but they talk about the G-Wagon write-off. So I bring up this slide here. We talk about buying, or not we, but I've seen other clips where people will talk about buying this G-Wagon, writing off $100,000 year one. You spend $150,000, you save $50,000 in taxes. Is it really worth it? Can you touch on this? Like, what is actually going on here? Is this worthwhile?
So I think what they're trying to get at here is you're taking either accelerated depreciation of some sort, like a Section 179 deduction, where you take it all at one point, and it's probably, I'm assuming this G-Wagon weighs more than 6,000 pounds.
It does.
It's probably 6,001 pound or whatever it is.
Yep.
And it needs to be, that is a pretty aggressive stance, because you're saying that is 100% business use in the little TikTok world video, or the picture you have up there.
Mm-hmm.
So that is, you're telling the IRS this is 100% business use. That could be
Let's say it was, though.
pretty aggressive.
Let's say it was.
But so you spend the 150 grand. I just want to work this out.
Right.
You spend the 150 grand, and then what? In this example,
They're writing off a good chunk of depreciation.
so
Year
you,
one.
Yep. So they are saving money, but the issue is it 100% business use? That's a pretty aggressive stance. I mean, it could be.
Mhm.
Maybe you have another car, maybe. But if you have a house, if you're living in your home and the car's in your office, you still have commuting, like from your house to your business. So it would be a pretty aggressive stance to take 100% business use on a vehicle. Although maybe if you had a fleet of vehicles, or you see people who are contractors, maybe it is 100% business use, because they're business. It's like a big old truck, not necessarily like that's like an SUV, but maybe it's a big vehicle they're using for their landscaping business or their contracting
supplies.
business or supplies. That's
Yeah.
where you would see it more often.
Yeah.
But there's always a nugget of truth, but there's also landmines that you could be walking through, and you might not know what those landmines are until after they explode, in which case it might be a bit too late. So I would be leery of using TikTok as your go-to for tax advice, and it won't work with the IRS when you say I got it on TikTok.
It won't?
No.
the tax colonel knows his landmines.
So
You avoid 'em.
It might be a little bit better for you to have work this out with your CPA or your enrolled agent, whoever you're using, your professional. At least then you can rely on their advice, and then you'll have at least a reasonable cause, like, well, I did this and I listened to my tax person, as opposed to, hey, I bought this vehicle and I'm writing it all off, because
TikTok told me so.
the issue with the meme you have there is really, is it 100% business use?
Right.
No, it's-
Even if it is, I mean, in this case, you're assuming a bunch of things. 33% tax bracket there.
Right.
So the net cost is $100,000. That's real money.
Right,
It's not
right, and
just
that's-
like
Yeah, you still got to come up with 100.
right.
Right.
Well, you got to come up with 150 grand to
50K.
buy it.
Correct.
Right, that's right. Plus, the 33% bracket is a little bit off in as much as
You think?
you got to look at the effective rate, right? Because the rates are starting off and they're gradually going up, right? So as the rates go up, so maybe they're in that tax bracket, but what's their effective rate,
Yeah.
right? And so you'd have to. There's a bunch of things you'd have to look at, but I think what they're trying to say, maybe in this example, is, hey, you bought something and you're writing it off, no pun intended, and you're getting some deduction for it, but so that's something to think about.
But the reality is, you're going to see a clip for 30 seconds. It doesn't
Right.
walk you through all the things you're mentioning.
Right, exactly, right.
Yeah.
Right, so that's where you get a little bit, right, and you got to weigh that against other things, right? So in other words, let's say you bought it, but you can't take this write-off to create a loss necessarily, right, if you have a 179 deduction. And then there's bonus depreciation, which you could take, but then New York State decouples. I mean, they don't follow bonus. So I guess it's a way more complicated than what they're perceiving,
Yeah.
what it's made out to be here. So I would be leery in that regard. I would not just.
Well, and to your point, though, Dave, most of these TikTok videos, they'll say something like, say you make $150,000 a year, buy a G-Wagon. And it's like, okay, well, how am I surviving then? Like,
Right.
how am I paying for my mortgage and food? And, like, a lot of these examples are like, I make 150, spend 150.
Right, exactly.
How do I live, you know? So, again, the devil's always in the detail as far as these
That's
are
right.
concerned.
And I would assume if you can afford a $150,000 G-Wagon, you can probably afford a competent CPA to do your taxes.
They should put that at the end of the,
You know,
the spiel.
because
Yeah.
it would be a stretch because there's so many other moving pieces and parts
Absolutely.
that go into that equation.
Yeah.
It's very misleading to just look at that one piece of one information point and make a decision based on that.
Yeah, agreed.
Okay, so Mercedes is not for you. You're going somewhere else. Maybe BMW, perhaps.
Maybe a BMW. There you go.
Nothing wrong. I do have a question. Are you good with that, Cons?
Yeah, I think that that kind of puts the kibosh on just that TikTok thing.
I would love to dive into the big question mark for 2026.
Big one.
BBB.
The big beautiful bill, baby.
What? How
Quadruple
did you
B.
even? I mean, it's almost like you knew I had this slide coming up.
Come
Yeah.
on.
Come on.
So that is interesting. So on the big beautiful bill, there's a few things for everybody.
Okay.
So there's some things that make things more complicated, and there's some things that will add, help. So let's talk about like on the individual side,
All right.
just not a business owner
Yep.
side.
Okay.
So there's a little nugget for people who are, let's say you're getting overtime. So if you're getting overtime, well, what's going to be weird about this particular year? So I'm hoping people are listening to this, and before you file your income tax, if you did get overtime, you're going to want to make sure you have your final pay stub.
You talking for 25 or 26?
2025. So when you get your 25 return done this year, you're going to want to say, hey, where you want to go to your employer and figure out what your overtime is,
Okay.
because it won't be on your W-2, which is a problem because when you have your tax return prepared,
Yeah.
the preparer, all they're going to do is see your W-2. Your W-2 won't show the overtime.
So the BBB is for 2025 as well?
Correct.
Wow.
So what you're going to want to do, and this is true for tips
Yeah.
and overtime.
Yep.
So, and there's, things that make things complicated. So the complicating factor in regards to say overtime is if you're getting overtime, there's phase out. It's about $75,000 of a modified adjusted gross income, and about $150 if you're married. But all
Okay.
that means basically your income before any deductions, essentially.
Yep.
So what you have to watch out for, though, is if you just get your W-2 and you give it to your tax guy, there could be overtime in there. And you're leaving money off the table, and your tax guy's not going to know what the overtime is.
Yeah.
You're going to need to tell that person what I'm getting, what your overtime is. But think about this: if you have a person and you're making $20 per hour for 40 hours a week, $800, and you work an extra, say maybe you work another 10 hours, so now you're going to get time and a half, so $30 per hour. So now you're going to get, say, $300 more, but it's only the extra $100, not the full, right? Not because it's only on the overtime premium, not the regular time.
Yeah.
So you got to be, some people in their mind will think, well, I worked overtime, I got $300. Well, of $200 was at your standard wage, your regular wage, and only $100. So that's something that needs to be broken down. And tips as well. So if you're in a tipping industry, you want to make sure you keep track of your tips. It should be, on your W-2. You can look at the W-2 and kind of break out the tips, but it depends on what industry they're in. So my whole point is, yes, there's these things, but you're going to have to be proactive and know to tell your preparer, because they're not necessarily going to be right on the W-2.
Yeah.
If you're a senior defined as older than 65, you get an extra $6,000 deduction. It's not that Social Security taxes are going to be not taxable. So in other words, you could be 65, not drawing on Social Security,
And you get an extra 6,000.
an extra $6,000
Really?
deduction, right?
Okay. Per senior.
per
So
senior.
that's
So
12 per married couple.
right, assuming you have
Wow.
both seniors.
Yeah.
So if you have two 65-year-olds, right, and then you're good to go.
So that's an extra $12,000 is completely federal tax free.
Correct. Yeah.
Love it.
Yeah. In
Yeah.
New York, they don't tax Social Security,
Okay.
but at the federal level, so you could be using that $12,000 to go against other income that's not
Yeah.
necessarily Social Security.
But so, like you said, Dave, in that example, you're not drawing Social Security. You're 65, you and your spouse. You now have an extra $12,000 of tax-free income, tax-free federal tax-free income.
correct.
That's
Right.
wonderful.
Right.
It's actually better than just Social Security. Like if they made it just specifically for Social Security.
Exactly. Depending on that person's case. Correct.
Yeah.
It could
So
help.
so it helps every senior citizen above 65 and up.
Right.
Okay.
One other thing to think about too is the SALT, the state and local income tax,
Mm-hmm.
that was taxed at $10,000.
Yep.
Now it's $40,000.
40,000.
But there's phase outs. Your modified adjusted gross income. So for a married couple, it's $500,000. So which is fairly substantial.
Yeah.
But the thing to think about on that is, you gotta. So in New York State, you could have in the past, like a lot of people would maybe take a standard on the federal and itemized on New York State side. So you'd
Oh,
have
you can do that.
right. You'd have a lot of people in the past that would have itemized on the state because the state didn't have a SALT. So if you have high real estate taxes, you may have been already itemizing.
Yeah.
But where you might want to think about it is, if I'm going to itemize, maybe I start making sure I have all my other itemizations and consider. Make sure you got your mortgage interest, your
Yeah.
charitable contributions, all of those things. Now, you might have been already doing that for New York State, but maybe not. Maybe sometimes people just take the standard on the federal and they'll just click the box and take standard on the state because that's what the software tells them to do.
Oh, I see.
So they might not know. They might not have entered in all that information for the software to make the determination. So you might want to. People may be in a position, especially if you're in New York State, when you have high real estate taxes, you may be able to write more of that off this year.
Sure.
So is SALT a good thing or not?
SALT going up is going to help. It's definitely a good thing.
So that's
Is there any
two
pepper?
times now I've heard that SALT is good for you.
Any pepper? Salt and pepper?
Nope, just salt.
Oh, okay.
Now, and if you're listening to this before the end of the year, and you have time to get your so you have RMDs, required minimum distributions.
Yes, sir.
And sometimes people will want to give money to charity.
Yeah.
So you can do a QCD, right out of your qualified charitable deduction against your RMD, and have it go right to your favorite charity, and still take a standard deduction, right? So you don't have to itemize to get that deduction.
That's actually wonderful.
So something where people might want to think about it. So these are things you might want to think about now that SALT is up. You could give, take your RMD if you don't need the money, have it go to charity, and still itemize or take a standard depending on where you fall. So the SALT going up is going to make, you should probably pay attention now. More people may end up itemizing depending on where you're going to fall in the equation.
Yeah. So if you want to give your RMD, your required minimum distribution, straight to a charity and not potentially have to itemize, you could just do a qualified charitable distribution, a QCD.
The QCD, correct. And it's a weird thing about that. You only have, even if you're not RMD aged.
Yeah, but you have to be at least age 70 for a
70 and a
QCD,
half.
70 and a half.
Right.
The original RMD number.
Right. They didn't move that number.
I forgot.
They probably forgot.
I
Well,
bet
we
you
do
did.
have the best and the brightest working in Congress.
We sure do.
Definitely. They are
Dave
on,
is a
hard at
big
work.
fan. Dave is a
they
big
are
fan.
they are on top of things. Awesome. They're right on top of it. Right. So they didn't change that number. So you can in theory have a person not taking their RMD out at say 72 but still do a QCD.
Yeah, which makes sense.
Which is weird that they didn't change the number, but the RMD numbers are moving.
Yeah, and the RMD's going up again in a couple years to 74.
Right, and then pretty soon it'll be 75, and that's where it'll max out.
Yeah.
Does
Crazy.
longevity follow that still? I mean,
Yeah,
did they say that we're living
That's what they say.
less?
We're living longer. That's
No.
why.
the coming generations
No, they're living longer.
currently.
Right.
Yeah.
But they're saying that path, that glide path, is actually slowing and going the other way, where you're going to have younger generations that live maybe less. I don't know if it's
But
kind of the food or habits.
But I think that with
Technology.
technology, it'll just in modern medicine and future medicine will continue to elongate the human life.
Well, I hope
Say
so.
with or without Bill Gates.
Well, he changed his stance on. Did we talk about this? We'll talk about it in another segment.
Hopefully, Dr. Dave, we do live longer.
Yes, thank you.
You know, we hope.
I'm a professional doctor.
So salt is good again.
Yeah,
This is
salt
the
is-
second
Yes.
episode I've heard salt is good thing.
Yes.
Salt.
Yeah. So on the business side of the big beautiful bill,
Ooh.
lot of little nuggets there too. One of the bigger things would be they all if they had done nothing, a lot of the provisions would have expired, which sunset. So they would have expired at the end of this year. So, for example, your QBI, where you can, if you have a profit on a business, you could have gotten a 20% deduction. Now it gets a little complicated what kind of business you are and what your adjusted gross income is. But generally speaking, you would have gotten a deduction for, say, 20% of your net income. Well, is it set to expire? Well, that got expanded. In other words, it's in play for going forward.
Yep.
One interesting thing that was put back in, couple of things that will impact businesses is bonus depreciation.
Yep.
Where you can write off the entire asset all at one time, similar to like a 179 deduction, like a bonus. But a lot of times people will choose to take a 179 deduction because New York State, if you're a New York State, business,
Yep.
won't follow the rules when it comes to won't decouple, so they're not following bonus depreciation. So if you take bonus depreciation, that it has to be an add back to your New York State return. But if you did a 179 deduction where you can write off up to $2.5 million worth of assets. Now there's
Annually?
annually, and there's limitations if you put in more than $4 million of assets in play. So again, it gets a little bit more complicated. But if you're an average small business and you're not putting $4 million worth of assets in play, you bought a couple $100,000 worth of assets, you could write them all off in 1 year, and New York will follow that.
Okay.
Now, on bonus, if you took bonus depreciation, New York would add that back. They decoupled. So on the big beautiful bill, that got actually added back. It was starting to expire, so you were writing off a little bit less, even last couple of years. When now it's back to 100%.
Okay.
And not that it impacts a lot of people, but I'll have a few clients that have R&D expenses, research and development expenses, where they made you amortize those.
Yeah.
So rate them off over, say, about 5 years. So now you can expense them in the current year. And they made it retroactive. So they passed a law in July of 2025 but it changes things back to 2023.
Oh, so you could do 2 previous years.
So now you may have to go back and make an adjustment for those years. There's
Yeah.
a couple of provisions that do that. So
But now you could take the full depreciation instead of over.
right, the full
several years.
deduction rather
Or
than
deduction.
amortizing it over 5 years. So
That's got to open up a lot of opportunity for you on the planning side, right?
oh yeah, there's plenty of
Because you could front load the income and then
yeah, there's a lot. That's what I'm saying is you're not necessarily paying your CPA to prepare your taxes, which of course you
I
are,
hope
but
not.
you're also preparing. The biggest value is helping
Strategy.
Yeah, right. Figure out a strategy to mitigate your tax situation.
Absolutely.
Unless you want to pay more tax.
Yeah.
I mean,
yeah.
so-
I don't see a lot of volunteers in that.
I mean,
in that path.
Right. But what I'm trying to say is you want to have a CPA help you figure out what all these rules when they come together.
Yeah.
There are so many rules that get very complicated.
Yeah.
Especially with the new bill coming in place. There's going to be a process of getting it all implemented. How does that
Yeah.
work? And then, in this case, New York State's decoupled, meaning they're not following
Yeah.
some of the rules, yes, and some of the rules, no.
Mm-hmm.
And so, how does that come into play with your business? So, I would say the big picture for me is you want to make sure you've got all your bookkeeping done. That is so key. Like if you don't have a good bookkeeping system, you need to get on top of that quickly.
Yeah.
Because you're not going to know. It's like driving a car without looking at your speedometer or anything. You don't have any gauges to figure out where you're going. But once you get that figured out,
Yeah.
then you can really start applying the tax law to your situation. And if one of the biggest things that actually I do a lot of times is figuring out what kind of business entity is the most appropriate, right? Whether am I a single member LLC? If I'm just one person? Am I a partnership? If I got 2 people? Am I an S corp, a C corp? Those things have many. Once you make a decision, it has a lot of different tax consequences, right?
Sure.
So oftentimes, depending on what kind of business you're in, you're going to want to be a certain type of entity, right? So that's something to really consider is, am I in the appropriate entity?
Yeah.
And should I be another type of entity? So maybe I should switch from a single member LLC to an S Corp. Or maybe I'm better off as a single member LLC. Or if I have a partner, now single member's off, now I'm going to be a partnership or an S Corp. And maybe a partnership is better. It depends what's going on in your business. And it depends a lot on, what your cash flow is, what your taxable income is.
Yeah.
And you've got a lot of things that'll
Legal.
Right, legal structure, right? You want to make sure you're working with your lawyer to make sure you're protected, that you do have the right entity to protect you.
Yeah. Well, and to that point though, Dave, with the salt tax getting raised to $40,000, isn't that going to change the conversation of like, what is it, the PTET credit and all of that?
Yeah, so that's a good point. So the PTET, the feds, when they lowered it, the states got creative and they came up with this way for your pass-through entity to essentially pay the taxes that were generated from that pass-through entity, right? It's called pass-through entity tax, PTET. So we're in New York State. In New York State, of course, you have to make the election by March 15th. So March 15th of every year, you have to make the election for that current year. Then you have to make a quarterly payment March, June, September, and December 15th for that entity for PTET.
Yep.
Now, with the salt going up, you might think, I don't need PTET anymore. But you might be wrong.
Yeah.
Because there could be a reason to have PTET. What if you're a big roller and you're getting phased out of the salt? So you're a business and you're making over $500,000, so now your salt is limited, right? Because I mentioned earlier, the salt, if you
caps at 500,
and it caps at $40K. I mean, $40K is the salt limit, but if you go over $500K, that salt limit is, it starts to get phased. So you might want to keep PTET in there for you. What if you take a standard deduction?
Yeah.
Well, and so maybe it would be better for you if you're not going to be able to write this off on your Schedule A, your itemized. Maybe PTET still makes sense. So with PTET, it's not necessarily going to go away. It's going to be much more nuanced, though. So now it's even more important to really work with your CPA. And the thing is, you have a small window to, essentially to re-sign up for PTET. To make it even more complicated, then you're sort of on the hook to make those quarterly payments, and you have to file a separate PTET return. So you got to think, is it worth all of the hassle to do it?
Yeah.
If it were me, I would probably continue to do it, because you don't know where your income's going to be, and it's a tool in your toolkit that you have. Because once you miss the deadline to sign up for PTET, it's hasta la vista, baby. You got to wait till next year.
You forgo it for that year.
You forgo it for that year.
Really?
Right, and you don't want to be late on your PTET payments or your PTET, filing. You got to file it, and it's almost a separate filing. You're going to New York State portal to do it. So it is more work. It will likely save you money, but everyone's situation is different.
Sure. So
and that's why you hire the colonel.
That's why you hire the colonel. That's right. Right. You don't want to be in a situation where you wish you did it and you didn't have it. It's better to have it and not need it, honestly.
Okay.
All right. Let's take a quick break here, and we'll be right back with the show.
Are you a business owner looking for ways to save for retirement, keep and attract top talent, or maybe just save the amount of taxes you're paying? We have solutions to help all size businesses, from solo practice to mid-size firms. There's a ton of tax incentives just up for grabs. Your employees will thank you for giving them a platform to invest in their future. If you have a retirement plan in place and you're not sure the best way to set things up, reach out to me, Constantine at Monarch Wealth Management, and I'll help you understand your options and know what you own. Not all advisors understand retirement plans, so make sure you're working with a knowledgeable team and experience the Monarch difference.
This is Pennywise Financial, and this is Constantine Katrinos.
All right. Welcome back to the show. Dave Young, CPA, the Colonel. Well, actually, let's talk about your service. First of all, thank you for that.
Oh,
Thank
no
you.
I
for your
see
service,
you're a lieutenant colonel?
I retired as a lieutenant colonel. It's been a while. I've been retired for some time now, but I was retired lieutenant. I am a retired lieutenant colonel. I made it as far as lieutenant colonel.
Lieutenant Colonel. So how long were you? Army, right?
I was Army about almost 28 years, so it's a pretty good run.
Wow. And how long were you active for, David?
I was mostly in the reserves or National Guard, except for my mobilization. So I got mobilized a couple of times, or maybe 3 times.
Do you mind kind of going through that a little?
So I actually joined up in high school, if you can believe it,
Wow.
and then went to basic training right after high school, before college, and went back and did my advanced individual training like AIT. Then got into ROTC, and became an officer, and then.
Okay.
I went to what they call Field Artillery Officer Basic Course. Came back from that.
Where was that?
Down at Fort Sill, Oklahoma.
Oklahoma.
And right after that, the first Gulf War started.
Okay.
I got mobilized for that, but oddly ended up in Honduras, of all places to go.
Seriously?
Honduras.
Yeah.
What were you doing in Honduras?
I was doing the job that the 82nd Airborne was going to do there, but they were over in Iraq.
Okay.
And then I got mobilized again right after 9/11. Right out of here, I was in the 401st Civil Affairs right out of Rochester, and we went over to Afghanistan. Literally, we were the first group over there. We're the first wave.
Come on.
So I was a civil affairs officer over there. So
In Afghanistan.
In Afghanistan, I did civil affairs, psychological operations, information operations. So I was basically on the ground all the time, out on missions for a year in Afghanistan, and came back from that, got mobilized again, and this time I went to Haiti.
Oh, really?
Yeah, and I set up a rewards program. I was going to actually go to Iraq. I ended up going to Haiti, setting up a rewards program.
Yeah.
And the rewards program was supposed to be just get it set up and then go.
Mm-hmm.
But it got it set up, and we ended up catching a lot of bad guys. So they left me there for a year.
In Haiti?
In Haiti.
Really?
The gangs, where after all the kidnappings and weapons and...
That's what you were doing there? That was the mission?
That was...
Ish?
Ish. That's
Ish.
the things... Yeah, the
Top-
things we can talk about.
Top secret?
But yeah, I was basically setting up a rewards program. We'll put it that way. It was pretty good. It was a nice time.
Like Marriott rewards?
Kind of like Marriott rewards, right?
Maybe a little different.
Free
Maybe a
hotel
little-
room?
Yeah, exactly.
Well, they were staying in some sort of
Yeah.
chamber. Wow. Well, thank you for your service,
Well,
Dee.
thanks.
Scary at times, I'm assuming.
Yeah. Yep.
Haiti or Afghanistan?
They both had their moments.
Yeah.
They could be.
I see a lot of pictures on Facebook, like around like Veterans Day and stuff like that.
Right. Yeah. Things could be exciting. Because in Afghanistan you had a lot of issues with indirect fire, or IEDs.
Yeah.
And you didn't know. So, depending. When I went into Kandahar, it was pretty hot down there. In other words, we're getting a lot of action down there. So we emphasized our civil affairs and making sure we're meeting the locals and working with people to minimize the amount of badness that were happening.
Yeah.
Yeah, so that worked. Well, at least when I
Absolutely.
was there. I mean,
Yeah.
It's been a long time now, but
Sure. And so when you came back, you were you stayed on as a reserve?
yep. Yeah, I stayed on as reserve and got promoted to lieutenant colonel, and eventually I retired. Yeah.
Oh, nice. And where did you have to go for your reserve? Like, where was your base?
It depends on when and where. Sometimes Webster for the 401st, sometimes on Goodman Avenue for the 98th, and then they moved down to Fort Benning. I went down to Fort Benning. When I was in information operations, we went down to Pittsburgh.
Really?
When I was in the Culver Road Armory right here in Rochester for a while. That was back in the 80s, and then down in Geneseo in the 80s, and Hornell, so all over the place.
Wow.
But nothing too far. But I mean, I retired out of Fort Benning, which is where I started basic training, which I thought was kind of a full circle.
Yeah.
Life hit a full circle. I started and ended in the same exact spot.
That's awesome, though. That is full circle.
Right.
Absolutely.
I got to imagine your service helps you in what you do, being structured and,
Organized.
right?
Yeah, it helps to be structured.
Structure's good.
Yeah, but definitely you want to be the kind of guy that pays attention to detail when you go outside the wire. In Afghanistan, you didn't want to be like, we'll wing it. No, probably not a good idea.
Sure.
And even in Haiti, issue in Haiti is you didn't have a lot of support, there, because you were just sort of you're just a small
Unit?
little unit there. It's just me and a couple other people there.
Yeah.
In Afghanistan, you had a whole group you were with.
Sure.
So it's a different type of environment. So, but yes, it helps. Exactly, it helps.
And that, Dave, if you don't mind just talking for a second about it, and when you went to Haiti, did that kind of spring into some of the ministry work you ended up doing?
So when I was in Haiti, I ended up helping out at that time an orphanage that was in what they call a red zone. There was where the gangs had taken over, so we helped move them. up to a place called Fort Jacques up in Kenskoff, up in the mountains.
Okay.
And then I stayed in touch with the folks I was working with in Haiti, and ultimately set up a school that got destroyed during the earthquake. And then we helped, I ended up adopting a couple of kids along the way. So we were actually in the process of adopting my son before the earthquake, and then we pulled him out right after the earthquake. Then I adopted a second child from Haiti. But I set up a ministry there in right around 2008 time frame. And it was primarily a school, but then it turned into like a sort of like a makeshift, I'm going to call it like a sanctuary orphanage for a small period of time until we could get kids back to family groups. And we set up some micro loan programs so we wanted the people to be self-sufficient. And in the micro loan program, we were able to set them up where they were seeded them some money so they could go out, essentially like they would go out and buy like say a case of water, and they could sell it, let's convert to dollars for say they could buy something for like $6 and sell the case for $12, have $6 left over. They have them at $12 that could then keep buying it, and that would be their cash flow. Then we would show them how to run a business, give them a gospel message. We would train up their pastors. Like I had a group. I had people on the ground doing it.
Yeah.
Not me. I was the guy up here, doing the fundraising for the people actually doing the work.
Sure.
So we had a micro loan program. We had a widows program that's still going on now. We had a program. Now we had scholarship programs where the kids would go to school, and we had tutors for them to make sure they were going to school, and ultimately put all the kids back in family groups, got them educated, and now they're in trade schools. Or now the kids are older because it's been a long time now. These kids have become adults, and we set them up in businesses.
Great.
But now it's been tough because of the gangs have come back, right, subsequently. So I haven't been to Haiti in, 3 years now. So
It's bad over
it's
there
bad.
now, huh?
Now you can't really get down there.
Who
It's-
is the government still? I don't
There's
even
not really a functioning government, so it's the gangs that are really.
because didn't the guy get assassinated?
Oh yeah,
The
yeah,
last it was a
yeah.
president, right?
Correct. Yeah. Yeah. So the
Wow.
gangs have taken over. So
Yeah.
it's difficult to get down there now.
Sure. Wow, that's crazy. Kind of going back to Const, did you have anything else on?
No, I love the idea of the micro loan were those successful?
Yeah,
I've
so
seen
that
other
was-
platforms that have
So
done
that was one of our most successful programs. So it turns out, at least in Haiti, one person can support 5 people. So basically, in Haiti, they view money as communal. So what would happen in the past? Let's say they go back to a scenario where they would go to the. I'm going to say it's like a market. But when I say market, it's like a street with people like vendors on it, like a big maybe like a park where they're selling things. People could be selling mangoes, chickens, vegetables, fruits, anything really, whatever they're selling. So we would set these women up. It was almost all women. So we were focusing on women because women basically held their families together, and they could hold multiple generations together, and they have multiple generations living in the same house. So we'd have to train them, like if they whatever money they got, they'd have to keep roughly half. So the next morning, they could go back to the depot, to their warehouse, and buy another thing they're selling, whether it was, let's say, juices or water or whatever they're selling. But sometimes between the time the market closed and the next morning, they'd come back and it'd be an emergency, and they would spend the extra money, but now they cut off their cash flow. If they spent the money they were supposed to buy the next thing to sell from the next day, they wouldn't have the money to come in to buy so once you trained them this, what would be a very basic concept for us, then you were able to basically lift them out of poverty, and they could start buying health insurance. They have their version of health insurance down there, and they would able to put their kids in school and get the kids educated.
How did you raise the money?
I went to a lot of clients, went to a lot of churches. I was active in my church. I was a deacon at my church, and we were able to get them involved, and we were able to get money raised up. I mean, I had a 501c3 that I was one subset of. Like I was one part of it.
So it's boots on the ground. You're out there trying to get.
But
money.
I would go to Haiti 3-4 times a year during when it was more permissive. So I'd go down there and check on them. So I'd go down sometimes unannounced, just go.
Yeah.
My only one would maybe meet my guy at my American guy at the airport, or meet one person, and I'd get to where I had to go. So
Yeah.
sometimes I would just show up and not let them know I'm showing up, and sometimes I would be planned. So if I would sometimes bring mission teams down, but typically I didn't bring a mission down unless that mission was doing something that they couldn't do for themselves. So I didn't want to do a building project because you could use local people to build, right? So rather than having 10 people each pay
Yeah.
$2,000 and it's $20,000, you'd be better off having much less money spent and having that money be used in the local economy. So they're buying the supplies locally,
Yeah.
they're using local laborers, and then the Haitians they would take some ownership of it, right? Because now it's something they built, whether
Yeah.
it's a school or school benches or desks or whatever.
Mm-hmm.
So that's where my mission trips were. Where I would bring, if I had brought a mission trip down, it would be more like maybe giving to teachers new rubrics to teach,
Mhm.
or I'd bring down some of my larger donors so they could see what's going on.
Yeah.
So that's how I kind of did it. So I was pretty active. I was going there fairly often. Like,
How far is the flight down to Haiti? How long does it take?
it's not long at all, ironically. So you would fly out of Rochester, depending on how you did it. If it was just me going and I didn't have a team, if I had a team, I would normally stop in Miami because sometimes you might be bringing people in from different parts of the country.
Mhm.
But as a general rule, you could leave Rochester on a 6 a.m. flight, get to Atlanta, have a couple of hour layover in Atlanta,
Mhm.
and get to Haiti usually by 1 or 2 o'clock in the afternoon.
Wow, that's wild. How
Yeah,
quick.
yeah, really, it's pretty. I mean, it's a remarkably short flight from, let's say, Miami to Port-au-Prince is maybe 45 minutes to an hour.
Oh yeah, it's on the other side of Dominican
It's
Republic.
really not
right?
very far.
Yeah.
But when you're from Atlanta, it's a little bit further, but
Sure.
it's really up and down same day. It's
Yeah.
a world of difference though. When you get off the plane in Haiti, you know where you are. I mean,
Yeah.
it was pretty wild there.
Yeah.
Commendable work. Thank
Yeah.
you for that
Oh,
too.
Yeah, I
Yeah,
appreciate
that was
that,
some,
Dave.
and that's my military helped with that work. Again, being organized there helps.
Absolutely, absolutely. So how big a staff do you have right now working at Young and Company? D?
It'll vary. Right now, we have about 8 people. Then during tax season, we'll plus up a few more people.
Mhm.
And we have a great crew over there. We really leverage our technology.
Mhm.
So the technology is pretty top notch, very secure. I'm very good about protecting my clients' PII, their private information, essentially, and
Yeah.
the staff. With the leverage of technology, you can really service clients much better and securely. But during tax season, we'll plus up a few during the busy season, and we have the rest of the staff for the rest of the year.
How do changes like what just happened with the big beautiful bill? How difficult does that become? Not only with changes, but it's now, starting now, it got approved.
Oh, right. Not only did it start
Gotta
now,
love the notice.
Yeah.
it got started. It's retroactive.
Yeah.
Right. What we don't do is we don't panic. We have a plan. We train the people. We train them pretty well. We get continued professional education.
Yeah.
And then and my manager make sure the staff is trained and how it's going to impact our clients. So we're already proactively reach out to our clients on all kinds of issues. So we sent out like a constant contact, like a newsletter saying, hey, these things may impact you. You may want to get in here for an appointment. These are the things that are going to specifically impact you. So are very targeted. So we're making sure our clients know about not only tax, but for example, if you got a business and they have more than 10 employees and they've been around for more than 10 years, they might have to have retirement plans going forward. We want clients know about the SHIELD Act. It may impact you there. We want clients know about, a lot of times their payroll companies don't put the officer's health insurance in the right box, so we're always reminding the clients about that in the fourth quarter, as before the end. So we're pretty proactive in making sure they know about PTET. So every quarter, if we know they're signed up for PTET, we're sending them reminders. We'll send everybody reminders to sign up for PTET. We'll follow up with them. As far as the staff, I treat them like when I was in the military, and so I'm making sure they're always well trained. I can tell you that.
The Colonel is in the house.
Colonel's in the house.
They know.
Love it.
They know they have to be trained well, and and you have to be prepared for essentially a broken government where things might not move as smoothly.
Yeah.
So when you're always making sure you build good work papers, you got good backup as far as like you can prove where your numbers are coming from, and make sure things don't slip through the cracks, right? Because
Sure.
you're not going to be able to resolve issues quickly with the IRS or New York State.
Yeah.
Essentially, they're understaffed.
You don't say.
They're broken. Whatever their issue is, you want to try to avoid problems. That's
Well,
why.
it's guilty till proven innocent.
Yeah, and the thing is, even if you are innocent and you have the proof, there's nobody. I would say this way. It's sort of like the wheel is spinning and the hamster is dead. There's nothing happening. You can be like, "Hey, I paid you. Here's your money left." You're like, "Well, yeah." It's like hard to get through. So
Yeah.
you want to do your very best to avoid contact with the IRS and New York State. You want to make sure everything is correct.
Don't look directly in their eyes.
It's like going to a party and you see that person you don't want to talk to.
Right.
Yeah, so you just look
right,
away.
Right, exactly. Make sure
gotcha.
your stuff is correct.
Yeah.
Before it goes in. That's why it's sometimes better. You have the opportunity to file extensions, and people freak out like, "Oh, an extension is actually most likely going to give you a better result because you've got that extension with more time to gather information and make sure you file a return accurately."
Yeah.
You have the ability. Now, the extension doesn't give you a time to pay. You have to pay what you owe by the due date.
Yep.
But you have an extension, so you can file your corporate extension on, say, March 15th, or your partnership extension or your personal extension would say due April 15th. Make sure you pay in the money you owe with your personal.
Of course.
Right? But then you have some time to get it right. And if you've got a complicated return, you're going to want your CPA to have some ability to think it through without being rushed, without having to work on hardly any sleep. And so you want to make sure that the return is correct and you're making sure that you're following all the rules, you're in compliance, but you're not leaving any money on the table at the same time.
That's always been my gripe is how much time do the CPAs have from the time they collect all the data, right? So you got 1099s, W-2s coming out.
Right.
End of the year, you got maybe first quarter, sometimes middle of March when you're getting documents. So it gives you about a month to file for somebody. Do you have enough time to go through and file those properly and look through all the deductions? Well, maybe yes, maybe no.
No, the answer is likely you'd be better off with an extension. Because what happens is you're not getting a lot of the K-1s or consolidated 1099s until, like you said, say March 15th. And now if a client's going to owe, what you want to do is get a good idea what they're going to owe.
Yeah.
Because if they owe, you got to let them know by April 15th to file the extension. But by and large, you're likely better off filing an extension if you've got a lot of moving pieces and parts. You don't want to be in a situation where you just hurry to get it out the door and it's wrong.
Yeah.
No, nobody wants that.
Right. It's better to, hey, let's get this thing done, even if it's done in May or June. You've got the money paid in. You had some time to think about it. And then you can run a lot of different scenarios. Well, what if I did it this way? What if I did it this way? Like we were talking earlier about how much depreciation should I take? Well, maybe you don't want to take it all in the prior year. Let's say you end up filing an extension. It's June, and it's June of 26, and all of a sudden 26 is really a robust year, and you're having a lot of income.
Yeah.
And 25 was just an average year. So maybe you don't want to take that big deduction in 25 because that deduction might be more valuable if you're taking it over time in 26. All those things come into play.
Yeah.
It may or may not be. So you got to give it some time to think about it and what's the best possible scenarios for you to, when you file your income taxes, it's also time to plan.
Yeah, I think a lot of people get panicked in the beginning of the year. And they're like, I got to file. I got to hurry up and file. And it's like getting used to just pumping the brakes and doing the extension. I think it helps everybody involved. And especially because so many people just do the standard filing before April 15th. So like you as a CPA and people in your world, you're so inundated with so many like tax returns that by myself doing an extension, let's say, it allows you to get all that done and then really focus on.
Right. And a lot of times if you're doing it yourself, if all you have is a W-2, maybe you're okay.
Sure.
But you don't know. Like I said, a lot of folks could have been better off itemizing on New York and taking standard on the Fed. You don't know.
Yeah.
You don't know.
The Colonel knows.
I know.
Yeah.
Yes, and my team knows. They know what they're doing.
Yeah.
But you also want to make sure sometimes the tax law is not quite clear, and sometimes the information that you're getting it's a little you got to make sure it's correct and it's understood on both from both parties, both the preparer and the client, to make sure you have everything correct. And if there's a problem, let's say it's a pass-through entity, which is like an entity where you get a K-1. Not only do you have to amend that entity return, now you got to amend the people who've gotten a K-1. So if you make one mistake on a 10 partnership, you got to amend
Do a lot
not
of
only the
amendments.
partnership return but 10 other
individual
returns, right? So this is why these are things you want to make sure are correct, because the things that the IRS are looking for is basis. Like, do they have basis, meaning do they have money that they paid in, or maybe they have a loan in there. It gets complicated when it gets to basis, because S corps have different basis rules than partnerships, and these are the things the CPAs, that are kind of working on to make sure it's correct. It's not just the income in and the expense out. It's the balance sheet side. It's the basis side. And that's why oftentimes when you have a complicated return, you're going to want to be on extension. That's why a lot of clients may not get their own K1, so they may have investments in other partnerships, and then those partnerships don't kick off the K1 until the summer. So if you may have clients of yourselves and they're invested in a partnership and they're not getting that K1 later, and that's the reason why. Imagine if you have a partnership with many partners, you want to make sure that partnership return is correct.
Sure.
Or else you have a lot of amendments.
I do have a question. You guys started talking about this. You mentioned technology, the change and implementation of AI. Where do you see that affecting things? And I got a tax kernel billboard up there for you, Dave Young. But where do you see AI coming into play? I mean,
I think AI is going to be a tool, and I think people may not be replaced by AIs, but they could be replaced by people using AI.
let me rephrase that.
So
I don't mean using AI to do your tax return. I mean from your business perspective.
Oh yeah,
helping you.
I think it depends on what you're doing. The AIs are just out now, so you have to watch out what you're doing. You don't want to put too much money or too much information into an AI module, because it might not. You don't know how secure it is or privacy, right?
Yeah.
So there's rules that CPAs have to follow to make sure you're not putting something into, say, ChatGPT that has clients' information. That's a no-no. You cannot do that. And then as far as tax research, though, I think that's where a lot of it, CPAs could use AIs. There's AI software out there that's helping with tax research. That's probably where it's going. But you want to be careful about what you're doing in the AI world, because who knows who else is seeing that information.
Scary. I do have a question too, Dave. I heard this rumor, and maybe you're like the Inquirer. Do you remember the Inquirer magazine?
The National Enquirer.
The National Enquirer. New York State, I heard that Governor Kathy Hochul was trying to potentially lower the New York State estate tax. Have you heard of any of these rumors?
I have not heard of those rumors. There is a cliff. So
Talk to us about the cliff.
So if you go,
don't jump.
Where is it?
So
Webster, Spencerport.
It's if you go over it's not a graduated scale for New York State for the estate tax. So it's possible what you might be hearing is that if you went over like $1 more than whatever New York State's cliff was, we have to look it up, like the amount that's tax free from the estate. Then you start owing estate tax.
What is that around? Is that $5 million around there, give or take?
I want to say it's closer to like $6 million.
Okay.
In there, could be higher.
Yep.
In that, we'd have to look that up.
Yeah, no, absolutely.
But
anyway,
I can tell you, soon we got to find out about the New York State Transparency Act. It's on her desk, and the 10th day is coming up, I think, tomorrow, that she's had this bill. So if you have an LLC, and we talked about the Transparency Act, right now, it's only if you have a foreign-owned LLC, so won't, in fact, impact most people. But if it gets signed and we decouple, then if Kathy Hochul signs that, it could be all LLCs have to register with New York State.
Yeah, what was that called? The Transparency Act, but there was another term for it.
So the federal had called CTA, Corporate Transparency Act, and you had BOI, Beneficial Owner Information.
Yes.
And now New York State, they wanted to say, hey, what about us? What about us?
We're important too.
What a bunch of garbage.
So now New York State said, hey, there's an New York State came up with the New York State LLC Transparency Act, which tied to the CTA, the Corporate Transparency Act. But then
that's cute.
But then the Corporate Transparency Act sort of got sunsetted, put on ice, essentially saying, hey, we're only looking for filings for people with, foreign owned. So now New York tied to that. So we got to see what New York's going to do. So it's possible that next year your LLC may have to be registered or not, and we don't know 100%.
And if we filed before when it was part of the federal deal,
that's a whole separate.
I'm assuming we're going to have to do it all over again through New York State.
Why would we make it easy?
Right, exactly, right. So Right. So to make it
Dave.
even more complicated, right now, I think. Well, tomorrow we'll find out a little bit more if she signed it.
Okay.
And if right now if nothing happens, my understanding is it's basically tied to just foreign-owned LLCs.
Yeah.
But my disclaimer here is reach out to your lawyer, not your CPA. This is a legal thing, right?
Yeah.
This is a legal thing. So has nothing to do with your CPA, everything to do with your legal filings.
Talk to your legal team.
Talk to your legal team.
And if you need some legal help, we got a buddy.
We have someone who knows this stuff, but talk to your legal team because it's something that now if it does, it'll be something you'd have if it's a pre-existing LLC, you already have the LLC, you have until the end of 2026 to register it. It'll be just like the Corporate Transparency Act where New York has a website where you go to. But just before I came here, I went to their website, nothing was on there.
Okay.
So we'll have to see.
And Dave, not to jump too far from you, and we probably have to go to a commercial or wrap it up or whatever. You're part of a organization, aren't you? On a board, meets down in New York City.
Yep, I'm part of the New York State Society of CPAs.
Oh,
That sounds fancy.
Dude,
the Colonel.
We make the actuaries seem like they're just we pick on them. We are CPAs. We're accountants. We have fun.
Yeah. But can't you have influence on decisions like this, as an institution?
We try to. We have parts of things we'd have influence on, some things we don't have influence on. So we just focus on New York State rules.
Yeah.
So you talked about the estate cliff. That's something we would work on.
Good.
It's but the New York State Transparency Act. We're just trying to get what are the rules so we can tell people what the rules are.
Yeah.
So that's something. But the estate, cliff was something we did work to try to get fixed.
Oh,
so that's
good.
probably what you're hearing, where it's in progress, or
Yeah.
in process to get fixed.
Do you ever have to do like a corporate tax throat punch as the Colonel?
Ooh, I'd like to see
No,
that.
I'd like to see. I have been accused of being the LIFO of a party. LIFO.
The
Wow.
LIFO.
Little tax humor.
Little tax
I
humor.
like it. I like it.
I always tell people I'm not getting old. I'm just fully depreciated and still in use.
Oh, wow.
That is the Colonel.
Yeah.
With his tax advice.
Yeah. So the New York
like
State
it.
Society does focus on a lot of financial literacy. So that's why we do our spots and
That's
on
cool.
Channel 8. It's a great group. It's a wonderful organization. Honestly, one of the best organizations I've been in, and it
Wonderful.
does encourage its members, to get educated and be involved and learn and keep going because there's so much. I mean, CPA can be doing audit, can be doing tax, can be doing all kinds of. There's so much.
Sounds
It's
exhausting.
a great career to be in. There's never a shortage of work. I can tell you that.
Yeah, but there's a shortage of CPAs
There's
right
a shortage
now.
of CPAs, but it's one career that there's always something to be done. And my best part is working with my clients. It's what I truly love, just meeting with the clients and meeting with them and having a personal relationship with them and getting things set and, really navigating a whole host of complicated rules.
Yeah.
They need someone
You
to
shake
guide
right
through
through 'em, Dave.
Go right through. Here's what we got to do.
Colonel's in
and-
town.
Yeah, that's right. So I love that part of it, and it's one of those things. There's always an opportunity. So if you want to have a good career, being a CPA is a great career.
Yeah, absolutely.
On that, I got a final question for you before we wrap up the show. For the Colonel, direct, right?
Mm-hmm.
So if the Colonel had a red flag check, if you will, for somebody who's out shopping for a new CPA, maybe they're not happy, or maybe they're doing their own returns, and it sounds like you made some compelling arguments for the reason to have a CPA working for you. But what would be a red flag if a person met with a prospective CPA, if they told them something, you say, run for the hills?
So I don't normally see that with what you're asking with CPAs, generally speaking, because the CPAs, we are required to be up on our continuing professional education and our ethics and all of this, a bunch of training we need to take and do. But I do see what you're saying with other people who might not be CPAs,
TikTok influencers.
where they're not. Maybe they're not an enrolled agent. Enrolled agent is a high credential. That's a really good credential. That means that person passed an exam and they can practice in front of the IRS in the state. But if they didn't have a credential like an EA or a CPA, I'd be a little leery. If they didn't have a good system to protect clients' data, I'd be leery there. Like, in other words, if they're just saying, "Oh, just email
email
this.
me your social security
Right,
number.
Right,
It's
which
fine.
Is, correct. Or they didn't have a good system in
Yeah.
place to secure the data. I'd be concerned. I'd also be concerned if they, honestly, if they just if they don't have an EA or a CPA, there's not really a lot. There's no one. How do you know that they're getting up to speed on all of their training, right? In other words, all their continuing professional education. I would be concerned. Half the battle is knowing what you should and shouldn't do. So, anything that's not in your lane, you should be pushing out. So I'd be asking them, well, what's their experience on? In other words, if they're just doing very basic returns, that's fine. Yeah. But if you got a business and it's got multiple partners and maybe moving pieces and parts, well, you're going to probably want to have an enrolled agent or a CPA because that is now more complicated. But it depends on the type of return you're doing. You can have a person has an easy return and they throw you a curveball if they have like a foreign account. Like say they have a foreign bank account. Well, that's a really big penalty if it's not, depending on the amount of money, right, has to be disclosed. It's not necessarily a tax issue. It's a disclosure issue, right? So if you have less than $10,000, you say, hey, I have an account, but it's less than $10,000. If it's more than $10,000, you have a separate FinCEN filing called a FIN 114. And if it's over certain thresholds, you have other forms you're supposed to file in 8938, and it gets complicated, and there's huge penalties. And the IRS, they love the penalties. They love those penalties. They
live off them.
It's revenue coming in to the Treasury, and they just love them. Yeah, give me more penalties. Give me more penalties. Sure. So if you have a foreign account and you're not reporting it, that's a big, serious problem. But it could easily happen if you just have but you could otherwise have a very basic return. Mm-hmm. But now you've just made a basic return complicated. So my red flag would be no credential, not taking cybersecurity seriously, or not having that be a huge priority. Those would be the things that would bother me if I was out looking for a new accountant. I'd want to have an accountant with an actual physical office where I can actually show up maybe and see that person. It's nice to have some things virtually, and that can work for some people, but also I think having a physical office where you can,
maybe a combination.
Right, combo, right. Yeah. It's we're very high. I have clients all over the country, but you don't want to have somebody you can sit down with and have the time to spend in order to mitigate your tax situation.
Sure. I do have one more question. Very serious
Let's hear
comment. Rambo or Rocky?
Oh, Rocky.
Okay. You got a favorite one?
Oh, boy.
Quickly, Dave. Quickly.
I kind of like Rocky 1. The
original.
The original.
Wow.
Then after that, I'll go for Rocky 3. Eye of the Tiger, baby. Eye of the Tiger.
With Mr. T.
He put Mr. T down because he got...
Yeah, but what's his name? Mickey died in 3.
I know.
It's a sad one. A lot of emotion.
A lot of them.
A lot of emotion.
Yeah.
How do clients get a hold of you?
A couple of ways. They can just call the office.
What's your phone
we'll
number?
throw it up on there.
Okay. Yep. Or my email. Throw my email, which is dyoung@youngandcompany.net, or call the office, and Ann will put you in, or whoever Ann will put you in with me, or whoever we need to direct you to. But I'll take care of you.
David, we appreciate your time and your wealth of knowledge. You have given us a lot of information today for clients and people listening to kind of soak in. I'm sure that you'll get ready and ramped up after the holidays for a busy tax season.
Yeah, we're already ready. We're chomping at the bit right now.
Awesome, brother.
The Colonel.
Merry Christmas, David.
Merry Christmas, again, guys. Take care.
Thank you.
You've been listening to Pennywise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480-1580. Until next time, this is Pennywise Financial, signing off.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA, and SIPC.